All right, guys. Thank you for tuning back in the Unbreakable Grind. CJ here. We're going to be going over my Robinhood investment account. This is me and my wife's joint account. All right, this is our high risk investment account. It's our smallest investment stock portfolio account, and we use it for high risk investments, man. So I want to show you guys this. I'm going to later be showing you guys some of our other accounts and just kind of show you how we've kind of accumulated our wealth and kind of started to grow our wealth as things kind of go. As time has went on. All right. That sentence didn't even make sense. All right. But at the end of the day, I'm going to be showing you guys how we built our wealth and how we're building our wealth in the future and going forward. So with no further ado, we're going to jump into the stocks. All right. So here we go. Let me move this screen back here. Order. Let me move this one down. Okay. Let's see if we can make this big for you. Ooh. All right, there we go. All right, let's pop me in the corner somewhere. Let me see if I can get rid of myself. I'm a little too big. All right. Maybe I'm good right here. Where should I put me? Let's see. Let's see how this works. Let's see how this works. Put me at the bottom. See how that works. All right, man. So here we are. You're looking at right now. You're looking at our stock investment account, and let me readjust this real quick. All right, yeah. So you're looking at our stock investment account right here. So as you can see, we've got $160,000 at play right now. That fluctuates. All right. As you can see here, earlier today it was a 161. So that's going to fluctuate. All right. If you look at our all time, you can see how we've trended over time. All right. So we pretty much started this account March 27th. Right. I think this was right after the pandemic stuff. Right. As soon as the pandemic stuff kind of happened, we created this account and we just started taking advantage of some of the opportunities that were in the market at that time. All right, so I'm going to go through the portfolio for a second. Just give you an overview, man. I'm not going to go and make this overly complicated because I don't think it has to be complicated. We follow a straightforward approach to it. You know what I'm saying? This isn't rocket science. So you know what I'm saying? My wife's a data scientist, so we say this isn't data science. It's not that complicated. All right. So at the end of the day, look at this. This is Boeing. One of our first investments was in Boeing. All right. So as you can see, we have a market value of 14K here. We got a total of $4,000 return, and that costed us $10,000. Okay. That's Boeing. Then we've got some Delta Airlines here. 655 shares of that. We truly believe that this will give us a large return because, I mean, Delta was the biggest airline, long story short. And by the way, we didn't put crazy thought into this, right? This is a high risk account. And we just followed basic common sense with a little research. All right. So pretty much Delta Airlines is one of the biggest airlines. We looked at their debt to income kind of ratios, and we came to the determination that we wanted to buy Delta. So we put 10 grand into that. 15 grand into that, and we've made 10 grand. So as you can see, we've got 26 grand there, plus or minus, that we've made off that. You know what I'm saying? And one thing I can say is stocks can be very simple or very complicated, depending on what level of complexity you want to take them to. Me personally, I'm interested in stocks for the sake of, for the purpose of growing my money. But it's not I don't overcomplicate it, right? Like I don't try to I keep the simple things simple, and I save all my my intelligence for the things that are truly complicated. So I don't jump into stocks and just try to go and make it overcomplicated. Okay, I'm okay with learning over time. I'm okay with losing money, if for the sake of learning. I'm also okay with learning for education. So I don't really give myself much pressure. I kind of we invest in the things we believe in and the things that seem like they'll work out for the most part based upon basic checks and balances, almost like balancing your own checkbook. We balance a business checkbook like that. And if it seems like, they have a good checkbook, and they can take care of the bills, then we're good. And if they have some growth, that's even better. So if you look here, Carnival Cruise Lines, this is a very risky investment right here, but who cares, right? We want this to be a high risk, high reward type of account. So as you can see here, we put $3,000 in Carnival Cruise Line. We've made $3,000 off that investment since March. All right, so not that significant. We're really hoping that after vaccines and all that stuff come out, that some of these type of travel stocks or these cruise stocks have a big turnaround, and that'll be cool. We'll make a lot of money pretty much with no effort. So that's kind of how we think about it. I don't claim to be a stock guy. I don't claim to be a Wall Street guy. You know what I'm saying? Like, a lot of people, I believe, overcomplicate things. It's just not that complicated. Like, keep it simple, stupid is probably is my philosophy when it comes to most things. And I only tap into that real intelligence when I need to. So constantly going forward. We're in NCLH. Sorry about that. NCLH. Norwegian Cruise Line. So we put $3,000 there, and we were like dabbling with this stuff because we wanted to do risky investments, but it felt a little weird. So we kind of gauged it and hedged against it a little bit. But in some of my other accounts, you'll see that we actually invested more than this into the cruise line. So we've got like bigger investments into the cruise lines on other stock brokerage accounts. So we just didn't really like Robinhood. Well, we like Robinhood, but it just doesn't seem like a good long-term investment platform. So we kind of limited how much money we put into it until we feel more comfortable. So as you can see, maybe I don't go through every single stock, but as you can see here, or I can go a little faster. But as you see here, we knocked $3,000 into Uber, made $4,000. Uber is like one of the ones we're really interested into their trucks that they have, the Uber trucking type of philosophy that they should have coming in the future. That seems like it has a good opportunity for some increase, and that's kind of why we invested in that. I forgot even what they have coming. I don't even remember. We did the research, we bought it, and then we just let it sit. You know what I'm saying? Some people would say that's crazy, but I could care less because I focus on the high priority. Just to put this in perspective, guys, I hope my education, the education I want to provide, isn't on, okay, how do you directly invest in the stocks? Because I feel like there are a lot of videos on, okay, this is what you do. This is what you look at. This is how you balance a business. This is how you evaluate a business. This is how you buy stock. I'm more focused on the real life aspect, okay? The real life aspect. And what I mean by that is, in real life, right, what matters? Okay, if you're just getting into this stuff, you shouldn't be putting your life into stocks. Okay, you shouldn't be saying, okay, my stocks are gonna make or break my life. If that's the way you're approaching stocks, you need to just stop. That's not what you need to be doing. Okay, what needs to be happening is you need to be building a skill set that the market needs. You have to build a skill that the market needs. Okay. That can be in whatever industry you want, as long as you search the highest demand skills and you get one of those, okay? And the highest demand skills in the next 10 years, and you make sure it's in demand now and it's going to be in demand. That way you can make money, okay? If you need your money off of your stocks, I think you're in an unhealthy spot. You need a skill that generates a lot of money, okay? That's where you need to be. Then you need to pay off all your debt. Okay, forget what anyone's saying. Oh, you can put it in stocks. Your stocks will make more money than your debt, and then No, that you see the problem with that is it's not fault tolerant. So I think like an engineer. I think about the edge cases. In order to solve a problem, you want to solve the edge cases, and then you can isolate the problem. And if you can solve the edge cases, then you've solved everything in between. All right. So what I would say is if stocks plummeted, and you haven't paid your loans, you have the loans and you have no money from your stocks, and you're just in double loss. It fails the fault tolerant edge case test at the end of the day. So what you want to do, pay off the loans. All right. So you ruin your chance of making all this money off stocks, but you also diminish the chance of going under due to not paying off your loans. The loans are not a burden on you. So you're not going to go as high as fast, but you're also never going to go too low either. Right. You're never going to go in the negative. You're just you might not go super positive at first. All right. So that's why I invest the way I invest. All right. I look on here, I get reasonably good stock investments, do reasonable amounts of research. I buy the stock and I keep working on my skill set and trying to build businesses and stuff like that. It's a more healthy approach. At the end of the day, all this stuff's going to go up for the most part as long as you buy healthy companies, and it doesn't even matter. Okay. It's going to be a matter of, are you going to make a stupid amount of money or just a little bit of money? Who cares? At the end of the day, you're going to make money, and that's what it is. You can get better at the stocks later, and that's the end of my rant, man. So now, where are we? Royal Cruise Line. We put more money in Royal Cruise Line, more cruise line stocks. All right, 5,000 in Royal Cruise Line. We've made 5,000, about 5,700. See what I'm saying? Real simple stuff, man. You see, it's all cruise lines, all freaking airplane travel stock, stuff like that. American Airlines is the next one. Look at that. American Airlines dropped another 2,200 in that, made $800, right? So we're just dropping money into these travel stocks. Disney looked pretty good, pretty promising. We put $6,000 in Disney, made $4,000. So as you can see, we pretty much were investing with this account into all the things that pretty much plummeted due to, you know what, all right, due to the freaking pandemic of 2020, you know. So that's what we did. History repeats itself when it comes to these things. So every time in history, when you have these kind of situations, people throw money into the things that fall and then they watch them rise. All right. Basic. It's that simple. I can make it more complicated, but that's pretty much all you need to do pretty well, you know, and you shouldn't be investing your last money that you need anyway. So, all right. UAL, United Airlines, another airline, $5,000 in, we've made about $3,000 almost, right? And I expect these numbers to freaking skyrocket as vaccines and stuff come out. Whether they do or not, I'm not saying I'm an expert. I'm not saying invest the way I'm investing, but I'm pretty confident that we're going to be very positive. All right, this account will be very net positive as time goes and as vaccines come out. I could be wrong. If you're an expert and you know more than me, drop it in the comments, man. The way I think, I have other ways to hedge against loss. But at the end of the day, I feel like this account is going to be successful, even with my level of knowledge in the topic. All right. And that's the thing you're going to know about me, man. You need to know about me. I'm just not overcomplicating these things. It's just a waste of time. You know what I'm saying? It's a false sense of, it's no point in overcomplicating this. All right. So now we have some Bitcoin, guys. My wife thought it was a good idea for us to get into the cryptocurrencies. So we bought one Bitcoin. I think we bought it at 32K or something like that. Now, notice how it's been going down. Oh man. All right, I knocked this my floating globe here down. There we go. That's a cool desk artifact right there. But we bought one Bitcoin at 31K. I mean, we bought it at 32K. So notice it's been going down since we bought the freaking Bitcoin. We didn't care, okay? We know Bitcoin is inflated. We know that there's hype on Bitcoin. It's gonna the bubble's gonna pop, yada, yada. Okay, this leads back to this leads back to more real life education versus theoretical education. You know, this leads to the real life as to how I think about this stuff, okay? When I view this, and we'll come back in the future and see if I was correct. When I look at this, okay, let's imagine I bought this at 32K. So I did buy this at 32K. So let's say I bought this at 32K and we come back and tomorrow and it's at 15K. All right. Like, man, you're dumb. You don't know how to invest. You paid 32K for something worth 15K. All right. I'm almost certain that if I just hold it, there will be a time in which it's gonna surpass 32K. It might be next week. It might be in the next 15 years. So why do I say this? Okay. When it comes to investments, as long as you're investing in pretty healthy companies or some kind of commodity or something, it doesn't even matter if you lose money. That's why it's important to start investing as early as possible, not before you paid off your debt and stuff, but as early as you possibly can. Because Even if you buy high, that high will be a low one day. That's the simple of it. One day that high is gonna more than likely be a low, and that means you're gonna at some point make money. Okay? In comparison to buying assets, right? Like stocks, investments, properties. In comparison, you could be buying cars, clothes, shoes, right? All of those things are going to depreciate, right? So let's say you bought a car at 30K. It's going to quickly depreciate in 50 to 15K, right? Like very quickly. You know, one would argue 5 years, something like that, even less. So once it depreciates, you lose half your money. You never get that appreciation back unless it becomes an antique or something like that. And that's going to take 30 years plus. And the chances of it getting back to the original value is almost none. It's not a good investment. Take clothes. Clothes depreciate rapidly. As soon as you buy them, they're not worth even half of what you paid for them. And they're never probably going back to the original value. So when you invest, you need to understand that it's no matter how bad the investment, it's probably better than anything else you can buy. If you buy an asset, it's probably going to turn out better than any other thing you can buy that's outside of the category as investment. And that's what you guys need to be thinking. Like, that's how you guys need to be thinking. You need to be understanding that even if you're a terrible investor, you'll be richer than a normal consumer. An investor who invests terribly is going to be richer just about every time or more rich than a consumer, no matter how smart the consumer spends the money. If the investor invests 100K very terribly but trying to invest in the healthiest companies they can find, but they're not really skilled, and a consumer buys the most lavish products that they can and they both spend 100K, the investor's still gonna win in the long run. Okay, so that's the point I'm making. So when I look at this Bitcoin, we bought it at 32K. It's going down to 31. I don't care how low it freaking goes. I'm just gonna keep it, all right? And one day it's gonna be past 31, okay, 32. And if it's not, that's fine. You know what I'm saying? Because you're supposed to you're not supposed to need this money. I truly believe you're not supposed to need this money. And you're supposed to do your research to find things that should do well, but they don't have to. And that more than likely are over some period of time. So if you go here, and one of the next cryptocurrencies we have is Ethereum. All right. Ethereum, we bought $20,000 worth of Ethereum. Okay. We've actually got a return on this. So we've got $700 of return on this. We just bought this maybe a couple of days ago. All right, guys. So if you look at our account, this is our smallest investment account at $160K through Robinhood. Okay. I'm going to be showing you guys some of our other investment accounts. I didn't want to go into this as far as the analytical detail. If you want me to do things like that, I can do videos like that. I don't think it's necessary because there are so many people doing it. I think the mindset is more important. I think just helping you guys understand that you're supposed to be building a skill set to make money, paying off your debt, and then viewing this as a win-win opportunity to invest in companies that are healthy and understand that that money is going to come back and come back your way much larger one day. And as long as it's doing that, you're doing a good job, right? Like I wouldn't try to make a living off of this without having a skill set first. And with that being said, guys, later we can, I'll show you some of our option plays that my wife handles and stuff like that. But that's CJ out, man. Thank you for tuning into Unbreakable Grind. I just wanted you guys to start to see some of our stock portfolios, see how we're doing things, and really get a good understanding of. Let me kind of drop this down really quick. Oh well, yeah. So really get a good understanding of what we're doing, how we're doing it, and hopefully this helps you guys know a new angle about me. I know I talk about this a lot in some of my other previous videos, but I'm glad that you guys can start to see some of the portfolios, can see more over time, and see that I'm truly authentic. I'm truly trying to help. I don't come from any of this. Okay, I've come from no stock investing. I don't come from engineers. I don't come from high value people. I don't come from rich people, anything like that. And I've still managed to make it very far, considerably far. And I'm gonna go quite far. The way my finances should scale, if I keep doing what I'm doing, it should be quite impressive. So I'll get back to you guys with some more videos, and thanks for tuning in. Peace.